Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Badlisyah Abdul Ghani. I am a Malaysian. I'm visiting IBA CEIF and discussing with bankers, academicians, as well as other practitioners within the Islamic finance market in regards to what exactly is Islamic finance and how do we go about doing Islamic finance in the global market, including in Pakistan. Today, I just want to share with you my thoughts on Islamic finance and how we should be looking at Islamic finance. This creature that we keep hearing about, known as Islamic finance, is something that is viable, credible, and profitable for those who get themselves involved in it. It is an industry that has been there for thousands of years. Most of the financial contracts that exist in Islamic finance has been there even longer than Islam itself. Mudarabah contracts, ijara, salam, istisna. These are contracts that have been there in human civilization for many, many years, and Islamic civilization made it better, made it consistent with Sharia. When we reintroduce Islamic finance in modern era, in various different jurisdictions over the last 50 years, what we are doing is simply bringing back all these financial transactions that has been done for many, many years and put it on the shelf in financial institutions regulated by financial regulators. Nothing more, nothing less. The activities that you see in Islamic finance are very much akin to the activities that you see in a conventional financial institution. And the reason why it is akin was because conventional finance took the infrastructure and the framework of Islamic finance and adopted it as theirs. And they include within the conventional finance framework certain items such as riba that is haram or not permissible within Sharia. So when we bring back Islamic finance into the modern financial market, we are simply taking the framework that was taken by conventional finance from Islamic civilization and bringing it, taking ownership of it, and implementing it within our society. What it means at the end of the day, the flexibility, the viability, the facilitation that you experience in conventional finance, you can experience the same thing in Islamic finance, because one, conventional finance is simply a mirror of Islamic finance. I refuse to say Islamic finance is a mirror of conventional finance, because conventional finance replicated our product first, our framework first. What we are doing is simply taking it back. So conventional finance mirrors that of Islamic finance, not the other way around. Travelers' checks, bonds, shirkah or companies, structures were all created by Muslims. These were products and activities that exist in the conventional finance space for many, many years. When we reintroduce it within the Islamic finance space, it is ours in the first instance. We are not taking it from the West, we are not taking it from conventional finance. We are just bringing it back. Right? If you want to use a description, it's more about opening our cupboard and taking it out from the cupboard and putting it on the shelf, where it can be seen and it can be used by the ummah, by consumer, irrespective of who they are, whether they are Muslim or non-Muslim. Now that we have Islamic finance on the shelf, the question that we have to ask ourselves is, do we want to use it? Why should we use it? Is it because it is Sharia compliant and therefore consistent with our belief as Muslim that we should be using it? Is it because it is a product that is very important in the overall financial market that we want to use it? It is the buzzword in the economy today, therefore to be relevant, to be cool, we use it? Is it because Islamic finance is very in sync with responsible finance, ethical finance, that we use it? We use it simply because at the end of the day, Islamic finance provides financial solutions that meet our needs. Whether they are basic needs such as savings account, current account, a term deposit to generate us some returns for our money, or is it the basic requirement for financing to buy a house, financing to buy a car, financing to send our children to universities, or sophisticated products that will allow us to generate returns that are in the teens, that are higher risks, that give you the satisfaction of getting higher returns. Irrespective of the needs that we have, Islamic finance has the capacity and the capability to meet those needs and satisfy those needs in the most effective and efficient manner. Naturally, every country will have to go through a phased approach in the reintroduction of Islamic finance in their jurisdiction. In countries like Malaysia, Islamic finance has been developed over the last 30 to 40 years through trial and error, through various tribulation, various crises that we have to go through, whether it is the Asian financial crisis, whether it is the global recessions, or whether it is the subprime crisis that originated from the US. Islamic finance went through those developments in many countries and continue to be relevant and continue to be facilitating and enabling consumer in regards to their financial needs. Of course, naturally, in the early stage of development, it may not necessarily be as great as that of a conventional bank that has been there for many, many years. But the evolution process requires improvement over time through interaction with customers, interaction with regulators, right? Interaction with all other parties that are involved in the financial market. So if people do not use Islamic finance, that interaction is not as great as it should be. It will not push improvement to happen fast enough. It will be a slower improvement. What we want is to have the interaction to be active, to be a lot. Yeah? So corporate sectors, whether you are large corporate SMEs, or whether you are individuals who are high net worth, or you are middle income, or you are a salary earner, or you own a sundry shops, so you are mom and pop entrepreneurs. All of you needs to use Islamic finance. You need to go into Islamic banks that exist in Pakistan to allow Islamic banks to improve their service and improve their products to meet your needs. If you don't use them, they will never know what you want, how you want it, and why you want it. So I will urge everyone that listens to start using Islamic finance if they have not yet used Islamic finance. If you are already an existing user of Islamic finance, use more of it. Right? If you have conventional finance product that you have been using for many years, you should go to the Islamic bank and ask for the Islamic bank to provide you with the equivalent solution. And the equivalent solution that you want should be competitive in terms of structure, in terms of pricing. Demand from your Islamic bank the same quality that you demand from a conventional bank. With that, I believe Islamic finance in Pakistan will grow, will evolve, will become the best solutions to your financial needs. But the Islamic banker can't do that themselves without your involvement. The Islamic banker cannot do that without your solicitation of their services. I have been an Islamic banker for 19 or close to 20 years, and I have gone through a lot of discussions with a lot of people in many countries. What is common in that discussion is people questioning why is Islamic finance the same as conventional finance. Another aspect is Islamic finance must be different than conventional finance. These are common statements. Right? I have alluded to these statements in the early part of this video. But I would like to tackle these questions and share with you the issues of this question so that you can also try and make sense of the issues that are brought up by a lot of people across the globe. Why is it the same with conventional finance? It is the same because, as I said before, conventional finance was established based on Islamic finance. When it was reintroduced in Holland in the 11th century. That's why it's the same. It should be different, some people say. Even after knowing that conventional finance took from Islamic finance their products and services, they still insist that Islamic finance must be different. My response to that question, or to that statement, is simply that Islamic finance is based on trade contracts, while conventional finance is based on a loan contract. It is already different. A loan contract is a lender-borrower relationship. A trade contract is a buyer and seller relationship, a lessor and lessee relationship. It is a partnership relationship, depending on the contracts that you use. A loan contract is riba. It involves the charging of money on money. A trade contract is not riba. There is no act of charging money on money. But people say that riba and trade is the same. Of course it's the same. But one is halal, the other is haram. Right? So when we go through some of this discussion on it is the same and therefore Islamic finance must be different, it is a superfluous discussion because it doesn't serve any purpose. The requirement for us is to do finance in a manner that is consistent with Sharia. And it's only Islamic finance that would allow you to do finance in a manner that is consistent with Sharia. Conventional finance just don't do that, does not provide that. So what you need to do is do Islamic finance. Don't worry that it looks the same, it feels the same as conventional finance. Know that although they are the same in terms of feel, right? In terms of the brochure that you look at, in terms of the sales pitch that your banker use to sell the product to you, know that one is halal and the other is haram. It's just like we go to a restaurant and order chicken curry, right? At the end of the day, to make sure that the chicken curry is halal, the chicken must be slaughtered in a particular way that is consistent with Sharia. And when you cook the curry, whether you use chicken that is slaughtered in the proper way in the Sharia, or you use chicken that is not slaughtered in the proper way in the Sharia, the preparation of the curry, chicken curry, the delivery, the presentation of the chicken curry is the same. In fact, the curry even smells the same, right? It tastes the same. But we know factually one of the curry dish, the chicken curry dish, is halal because it is prepared in a manner that fulfills the condition of Sharia, while the other chicken curry was not. So Islamic finance is just like the chicken curry. And sometimes people may find that statement is funny. It may sound funny, but factually it is correct. Islamic finance is just like your chicken curry, so enjoy it. Go into the Islamic bank, order it. Ignore the smell, ignore the taste. Just enjoy the benefit of Islamic finance in the same manner that you would enjoy eating a chicken curry cooked in a consistent manner with Sharia. So with that, ladies and gentlemen, I really hope you will give Islamic finance a try if you have not done so. And for those who have used it, do more of it and encourage all your friends and all your families to do the same. Thank you. Assalamualaikum warahmatullahi wabarakatuh.